Hey everyone, John Galloway here with another Model Monday. Joining us. If you got questions about the model, text me. It's as simple as that. If you want a copy of the PDF that I show you at the end, if you want to understand how to better model this real estate, if you want to know kind of how to invest, if you want to talk to me about helping you buy your first investment, buy your second investment, do a 1031 exchange, I'm here to help. I've got a lot of experience buying and selling investment properties, and this is what I do every day. So without further ado, what are we modeling? This fourplex in Denver, Colorado, it's currently the cheapest fourplex in the entire metro area. 4 units at $675,000. We just had a $25,000 price cut, as you can see. This property consists of a few studios, 2 studios, a 1 bedroom, 1 bath, and a 2 bedroom, 1 bath property. It's located in the Elyria-Swansea neighborhood, and several of the units are currently rented. It's got 4 parking spaces, 4 individual trash receptacles, and the property behind it is actually also for rent. Pretty cool. But do the numbers work? Let's see. Okay, so when we underwrite, where do we start? We start with just a description of the property, right? So it's located at 4662 William Street. It's about a 2,000 square foot property built in 1937. The model is assuming that we're going to purchase it below market. I think 675 is still a little bit high. I bet it's a little soft. So our purchase assumes 650 purchase with 7,500 in closing costs. I'm assuming that after we take it over, that we're going to spend about 10,000 in capex dollars. No lender reserves or anything like that. No GP or LP structure. We'll get into kind of how that works in a different model. 30-year fixed term loan at 7.5%. That's about where mortgage rates are. Again, just an assumption for the model. We're assuming that things will grow at about this amount per year, 3% for rent, 2% for OPEX, excluding taxes, 2% for property taxes, etc. There are 2 studio units. There's a 1 bed, 1 bath, and a 2 bed, 1 bath at this property. All right, here's the average square footages. One is rented for 800, another for 1600. We think post renovation with some better management that we could probably get another $100 a month for the studios, 1,300 total for the 1 bed, 1 bath, and then 1,750 for the single 2 bedroom unit. We're also assuming that we're going to do $40 a month in rubs. This is just a utility chargeback. $40 is about market for this area. 5% vacancy assumption, $450 per unit per year in repairs and maintenance, $350 per year per unit in make ready costs. That's if we're turning the unit. What do we need to do? A little bit of paint. We need to kind of fix this or that. 8% of gross revenues as management fee for a property manager. You don't have to use a property manager for this 4%, but I always like to model it in there just in case you need it. And if the numbers work with the management, well, then they work even better without it. Insurance at $945 per unit per year. I'm assuming that we're going to have at least that much of insurance. That could come down a little bit, but the insurance market has been getting kind of tough lately. And then $546 per unit per year in property taxes, a little over $2,000 a year in property tax. Okay, so what does that mean practically, John? Here's the model exported as a PDF. This is what we use to fundraise in our syndication business. It's also what we use to just help people understand better what's what. You can see that based on my assumptions, we do have about $3,700 a month in net operating income, and that the property actually does cash flow after financing per month. If we have a higher loan to value, if we have a lower cash flow, this assumption might change, but we're starting off once we rent the space, the unrented spaces for about $600 per month in cash flow. 11.5% return on investment per year, 1.58 net equity multiple, that all translates to a 10.19% net IRR. That number could do better if we get better financing. For instance, if you do an owner-occupied loan on this property, for instance, you move in and rent the other places, we could improve that IRR a little bit in that case after you moved out, just because the interest rate would be better. If we took out a lower loan-to-value loan, this could improve. If we took out a higher loan-to-value loan, we could also see some movement in the other direction, but the cash flow would suffer significantly. You see right now that the stabilized cash flow after financing is positive. We really like to see that. We really don't want to buy something that's going to cost you money as you own it and you're just relying on appreciation. That's not, the best world. Okay, so levered and unlevered returns, that's here. Levered just refers to whether we have leverage on the property. And then kind of our final information is in place. The in place numbers are not really great just because it's vacant, and so it's kind of saying like, oh well, it doesn't really, the NOI on this property is making it so you should really only pay 55 a unit. That's not really the assumptions that we're under. At sale after 5 years, based on where the NOI is, we're thinking that it'll be worth closer to 785 or 40, which is closer to a 200 per unit. This is kind of what we're seeing in other parts of Denver. Is this 200 per unit? So, with the changes that they're doing in Globeville, in Elyria, it's likely that the neighborhoods will continue to appreciate here. So that's just a high-level overview. I don't cover everything in these Model Mondays. They're really designed to be a short, kind of 5-minute video for you all just to understand kind of how we look at it and what some of these figures are that we focus on. Yeah, this could be a good investment for the right person. Somebody with a 1031 exchange that wants to buy the land behind it. Somebody with an owner-occupied loan that wants to move into one of the units and rent the other ones. There's a ton of possibilities here. A lot of properties are not cash flowing in this market, so it's really nice to see one that has a net IRR above some of the returns we can get in the market for no risk. So, hey, y'all, text me. Let me know if you want the final version of this model. If you want to talk about another property that I have not modeled, if you want to make your first inroads in real estate investing, I'm here. I'm here to help. I'm available, all day, every day to talk to you guys about property and about how I can kind of help you realize your goals. So text me, call me. Looking forward to hearing from you. Thank you so much for the time and the energy. And I'll see you later and or next Monday for another Model Mondays. Okay, bye.